Everyone, hope you're all doing well. Welcome back to the channel. It's Chris here. In today's video, I will be discussing how I'm going to be trading meme coins in 2026 and how you can follow this simple strategy, this simple criteria that I'm going to be following and make money. Meme coins are not as hard as people make them out to be because they overcomplicate it. They want to be buying new pairs, they want to get 50x returns, but the real gains come from having a strict criteria that you follow and also entry and exit points that I've taught on the YouTube channel previously and will teach once again in this video slightly with more explanations coming in future videos. So how am I going to trade meme coins in 2026 and how are you going to trade meme coins in 2026? We are going to focus on the high market cap runners. So right here, we're on the Axiom trading platform. This is the best meme coin trading platform. You can get access to it by signing up with the link in the bio. You'll get 20% off the trading fees. So we're gonna go to this tab right here called Deck Screener. And you can, have it on 24 hours. I'm just looking at all these coins. You can have it on 24 hours, you can have it 6 hours, 1 hour. I like to toggle through all of this because each time frame tells you a different story. So I just toggle through all of them and I just see which coins are popping up the most. So we got Punch War, Lobstar, right? Penguin, we got what, 6 hours? We got Punch, right? Lobstar, etc. and all these things. So what we're gonna do is, okay, let's look at Punch. Punch is the first one that pops up. So we're gonna click on Punch. Let's actually go to the filter. I have only one filter on this. I have all the protocols selected and then the metric is 1 million market cap. That's it. And obviously you can do 250K market cap, 500K market cap. I'm sticking to 1 million simply because it's even easier, especially with the criteria and strategy I'm going to teach you. Okay, so let's go to Punch. All right, let's hide all the bubbles. And here we have it. This is a coin that was launched 16 days ago. It's about a monkey with its toy. I've actually seen this on Twitter. It's kind of cute, kind of stupid, but whatever. And this is what we're looking at, right? At first glance right here, you're like, oh, Chris, I don't know what I'm looking at. Yes, it's a little bit difficult now that we've had so much run up, right? But this coin's been popular for basically since the 14th, right? Valentine's Day. It's been popular for about 8 days now. Since about here, it's been popular for about 8 days now. Let's say from here. So with Deck Screener, the beautiful thing is you're gonna be, if you check this daily, hourly, whatever, you're gonna know about this coin about here. By this range, you're gonna know about it. It's gonna be on your radar. So right now I'm making the video, it's already here, of course, but we're looking at, let's say you're back here, right? Back in this part and you're looking at it. Let me zoom in, so let's replicate that. Say we're like that. Actually, let me do 15 minutes. Let me do 15 minutes and let's actually replicate this, right? So let's say you're looking here and you see that we've pumped a lot and you're getting FOMO, like, oh my gosh, in 1 day, 2 days, we basically went from 2 million to 20 million to 10x. We're down, right? Well, Chris, where do I buy? What do I do? You are trying to identify areas. You're trying to identify areas of potential support, okay? So if you're looking at this here, you have, okay, we have this resistance level here, we got above it, we got broken below, right? We have this support level in here, support here, and then where's our next level? Support is in here, right? So let's draw some rectangles. So your support level is kind of in here. Let's extend it right. Then you have some support in here. I personally don't like these supports simply because they're too high. As I've shown on the channel previously in past months, you usually want a, let's say, 40 to 60% dump off the highs before getting in, right? So 40 to 60%. So here you have 40, okay, and here you have 60. I ideally like targeting 60 to 70% because that's kind of the golden ratio of Fibonacci, right? If you have Fibonacci, say this is from swing high to swing low, let's say, the best kind of trades are actually right in this zone right here, golden zone of Fibonacci. And that offers great opportunity to buy. So if I drag, let's just say the Fibonacci, I don't use it because I mentally do it, but let's just say from 0 to here, where does Fibonacci show you is a good buy? In this zone right here, right? The initial zone I marked, okay? So Fibonacci showed that this zone is the best right here, okay? And we already knew that. Why did we know that? Well, we had this 60% dump from the lows, which that's what Fibonacci shows, right? It's 60 to 70%. And likewise, we have a great high time frame zone of support right here. We have a great high time frame zone of support because this was actually the previous run up high, right? You see how this was a high right here? And then we went here, rejected the high again, right? That candle. And then we bounced here and started forming a cup. or you can call it like a rounded bottom, right? So what happens, we start forming it, right? As I mentioned in previous videos, that pattern I taught you, remember inverse head and shoulders, you have the shoulder here, go lower, create the head, go above, create the shoulder, bounce off this, beautiful, and we go higher, right? And then what we do, we break above this high right here, right? Short-term high, create it, support off it, so resistance turns support, and now we're bouncing. And now essentially we're going straight up, right? Yes, do I know it's gonna top usually here? Because look, 1 high time frame drive pattern, 2 high time frame drive pattern, 3 high time frame drive pattern. Okay, these are all connected because if you zoom out, these are all the same, roughly, right? Or if you don't wanna count it, you don't have to count this, but I do. The first break above the liquidity zone is the first drive, right? First drive above, second drive above, third drive above, right? And then you get a couple small drives here, but they're not breaking these wicks. You see how this candle is holding here? So that's showing me, like, wicks do the damage. There's a saying called wicks do the damage, bodies tell the story. So the wick does the damage, but the body's closing here, right here, see? So it's holding a tough perimeter. So if I'm looking at this like this, right? Let's just say we're here and this is price action right now. I know right here is a tough resistance level. I know we have some support here, and I know our big zone of support is in here. And so what do? You can look and see, okay, let's see how price is developing, right? Okay, we're bouncing a little bit. So we bounced initially off here, okay, but what happened, right? What happened? We bounced off here, but we created a lower high. We rejected actually off this previous short-term high, turning into resistance, right? So now what happens? Rejection, lower. And you might be asking, Chris, why aren't you buying this? Well, it didn't hit our zone. This is the zone I'm looking for in here, right? This is the zone I'm looking for. This is resistance turned support. So this is a strong level where we previously bounced off of. And as I mentioned, it's 60 to 70% away. And that's the criteria. There's many criteria, but you can do 60 to 70% away into a high time frame zone, previous order blocks turned resistance into support, etc. Okay, so what happens? Oh, and likewise, I apologize for butting in so fast. 3 drives pattern. I'm gonna make a complete separate video on all these topics. Order blocks, 3 drives pattern, an updated support and resistance strategy, but this is combining all of it. And another reason why I am not buying here, right? You're gonna say, oh, it's hindsight, you're looking at the chart. I agree with you. Right now I'm looking at the chart. I'm not trading this because I wasn't trading meme coins back when this is happening. But why? So I zoomed out on this chart because I'm going to show you why I wouldn't buy this right here. Okay, so initially we have this kind of level of support here, right? We have this resistance in here. What happened? All right, once we break this support, we have 1 drive here, bounce, right? Second drive here, bounce. Actually rejects the previous support. We're turning to resistance. And now we have the third. I'm buying this because I'm looking for all of my criteria to get hit. It's not one of those things where, oh, it hits support resistance, but it's only 20% down, right? Because right here, if you support and it hits right here, you're not buying this because it's only down, say, 30% from the highs. It's not good enough. The criteria is as follows. 1, 60 to 70% dip off the highs. 2, does a 3 drives pattern into a high time frame zone. And then 3, the high time frame zone is an order block or support turned, I apologize, or resistance turned support. And order blocks are usually the same thing, is resistance turned support, okay? So these are the criteria I'm looking for with trading meme coins in 2026. We're looking for high volume, high market cap coins, check, right? Above $1 million, we're gonna check the deck screener as I showed right here. We're checking all the coins. We're gonna go through all these, right? So we found the coin, right? We're just looking at these coins, right? Just because it's on deck screener doesn't mean you're buying it. It doesn't mean like, oh, immediately I'm gonna buy it. That's not what it means. What deck screener is showing you is, hey, these have high volume, high liquidity in them. There's a lot of money being in them. Let's just take a look and see if we have an opportunity to make some money. And so what are we looking at? We're looking at these 3 criteria. Is there a 60 to 70% dip off the highs? Is there a 3 drives pattern into a high time frame zone? And the high time frame zone we're looking for is an order block or resistance turned to support, which is usually the same exact thing. So as I mentioned, if we're here in the price action, this is what we're looking at, right? So this is the chart right now, right? Let's just say we were looking at this February 16th, over a week ago. This is what we're looking for. Is there a 60 to 70% dip off the highs? Well, currently there isn't, right? Let's just look at this. Since we didn't close above this, that's where we're gonna do the 60 to 70% from, right? Or you could do the midpoint, like the 50%. I'm just gonna do here. What's 60%? Look at that. 60% perfectly lines up with that, right? Which is your order block, your initial resistance turned support. And where is 70%? Let's do it from the same thing. 70% is right here, roughly, right? Which is actually the bottom of those order block or that support right here. Look at that. Order block and order block. This is your entire order block or your previous resistance turned support. So 60 to 70%, right, is saying, okay, right here is where I'm looking to buy in this area. Okay, well, let's look to the left. 60 to 70% is saying we got to buy in here. Let's look at the left. What's in the left? Oh, okay, we have an order block. I see we have a previous high. We got rejected here. We created a bottom, and then we broke above it. So that is a swing high, right? Previous swing highs act as support because they were once resistance. So, okay, check. Our criteria, 67% dip, check. We have a order block here and resistance turn support, check. So what am I now looking for? The 3 drives pattern. Well, okay, let's see how price action develops, as we were mentioning, right? We have this zone right here. Let's draw the rectangle so we know exactly what I'm looking at and we're not messing anything up right here. Okay, 3 drives, right? As I mentioned, the 3 drives occur once it's breaking out of the support. That's the support. So you don't have an initial drive until here. This is your first drive right here. That's your first drive. Okay? Then what happens? We have a pump. Great, whatever. You're not buying this. It doesn't matter. Oh, Chris, I would have made money looking at it. It doesn't matter because you're trying to create a repeatable process that you can do daily or weekly with no stress, no guessing. Okay, no guessing. This entire criteria I'm giving you is to eliminate guessing and stress. The less stress you have, the more free you are in terms of your mindset and your mental capital. Mental capital is far more important than your financial portfolio capital. Because if you drain your mental capital, then you're not going to think, and then you're going to destroy all of your portfolio and your actual capital. And mental capital gets destroyed first. So this entire goal, this entire strategy, this entire criteria with these filters is for you to prevent the drain of your mental capital, because that in turn prevents the drain of your future portfolio capital. Okay, so you have the 3 criteria. This is drive 1, no good. We're waiting for this zone, drive 3. Drive 2, barely touches it, doesn't count. Drive 3, beautiful. Okay, and you buy, and there's 2 ways to approach this strategy. I personally believe in small base hits as opposed to home runs because you can recreate it a lot, right? So I know, for example, right here, as we mentioned, is a good zone and it checks all 3 criteria. So say we're buying in here, but as I mentioned previously on the channel many months ago, you're not instantly buying this zone, okay? Because as we mentioned, this is the zone right in here, roughly, I believe it was somewhere in here. We're not instantly buying the zone because what can happen? Right? Meme coin market, it's 2026, it's a little bit more different. It's not as crazy as it was back then where everyone has money and throws money into it and is buying everything. This can easily just go right here and bleed right through. And then you're gonna be like, Chris, I watched your stupid video, you stupid idiot. It went right through. I did everything you said. I did all 3 criteria, I found a good runner, etc., etc. And I'll be like, yes, absolutely, you did everything correct. But you didn't follow the entry technique, entry model that I've taught many months ago on the channel, which I'm going to reteach, okay? Everything I taught and showed many months ago on the channel, I'm going to redo with updated examples and, you know, more descriptions, more nuance, etc., okay? But to put it quickly, the entry model you want to be doing, right, is the inverse head and shoulders. You see how we initially hit here, bounced, right? Then we create the head in here. We have a little bounce, and then you see it's coming back. Mind you, this is a 15-minute chart, so there's a lot of price action here. And it's holding steady at this swing low. Swing low, swing high, swing low. You're not instantly buying this. You're trying to wait and see if there's some strength in this zone. So what you're gonna do is you're gonna not trade, but you're gonna hold this zone as if we break this, we're gonna go lower, I'm not interested. Because we're in this, remember, we're in this big zone that we looked for, all right? I'm gonna keep drawing it, I keep building it, I keep drawing it. We're in this big zone, so I know, like, hey, this is our first bounce. Usually the first bounce out of the zone isn't the strongest, simply because people are unsure, right? People have to step in and put their money where their mouth is and buy here. And some people are scared. So the first bounce is not going to be strong. People are going to be doing exactly what I'm saying right now, is they're going to be waiting for strength. So it right here bounces and then it gets sold off a little bit. You're waiting for this strength to come back in, and then you're going to start buying in these green candles. Okay? Right here in these green candles, you're going to start buying, and your stop loss is right here. Okay? You have the zone in here, and then your stop loss is right there, right below here. You can do a stop loss below the full zone right there, but you're just giving more money away. I'd rather get stopped out really fast, and if it goes lower, and then it gives me the entry pattern again where it bounces, goes up and like this, I'll just rebuy, and I'll take a 10% loss or a 20% loss as opposed to 50% loss, okay? And then you're buying in here, stop loss is in here. And I personally believe in take a 20 to 30% base hit, accumulate your portfolio, compound it. But of course, you can also try and hold this and look for zones, right? As I mentioned, support resistance. You have a resistance zone here. Coincidentally, it goes straight into there basically, right? You have obviously more resistance zones in here if you believe it's gonna go higher, etc. I believe in take your 30%, 40% return, 20% return, whatever you're feeling, and get out. Because you can always re-enter and keep looking at the new chart, right? So if you buy, let's say in here at 8 million, 30% is at 10.4 million. Look at that. That's where your first swing high is, right? And it goes here, goes up, touches this, right? So say you got out right here. You're not even in this trade, but you got out here. Cool, you're out. Okay, you got your 30%, you're out. And then you're like, okay, I still believe this is gonna go higher. Okay, well then let's look for other criteria, right? You can't use the criteria I did already with the 60, 70% dump and all these things because it already offered it here. So if you sell here and it offers it again, that's not good. That's poor. That's strength, like lacking strength. That's weak. Because once the three criteria get hit, 67% dip, 60 to 70% dip into the zone with the three drives pattern. After it leaves the zone, you do not want it coming back, because if it does, that's bad. So then you're looking for other stuff. Okay, I got in here, I sold here. Now let's see. Okay, got in here, went here. We got this resistance zone. So I'm gonna wait for this resistance zone to get broken through, or I'm gonna wait for a support level. Well, where's our support level? We have a support level here, and we also have these support levels. So this initial drive, this initial drive. You see how we made these lows right here? That's all in there. So this is an even bigger high time frame head and shoulder, or inverse head and shoulder, whatever you want to call it. We have this shoulder, this head, this shoulder, right? You see how it's kind of rounding out? You want to be buying strength out of the lowest part, as we mentioned. See how perfectly the lowest part comes in this zone right here, bounces out, and we're buying right in here. And then we're selling an arbitrary 30 to 40% return scalp, which would be right here. And then, okay, we missed this because there's nothing to buy here. We hit here, whatever. We didn't get extra money. Doesn't matter. We're out of the trade. Hits this resistance zone. Then where does it go back? Well, you're looking, okay, well, we have this support in here. We have these supports in here, these previous bounces. So it can bounce in any of these zones in here, right? If it breaks through this zone right here, that's not good. We don't want that because then it's weak. So I see this zone, I see these zones right here. So I'm gonna see if we come back and bounce into this. And what do? We come back slowly and bounce right into this, right? Right into these zones, as you can see, right? Let me do a rectangle so it shows it perfectly so you know what I'm talking about. And look at that, right? Now, you don't wanna be buying this. Can you if you're in the gambling mood? Sure. But it's still not really showing you strength, right? Because what's going on right here is, yeah, we have a swing low, swing high, swing low, but the thing is this can break down and just go lower like this, right? Swing low, swing high, swing low, and break down. So this creates a swing high, but that doesn't mean right here we're gonna bounce and go higher. You don't know that. For all you know, this can go like this, swing high, and then swing low and lower. So what you're waiting for is some strength or a break of the swing high. So what you have, right? Swing high, swing low, we break it, swing high. So now we know we're in an uptrend. Now we know we're okay to be looking for buys. So as I said, support, right? Support, it turned into resistance, then we got back above it, support, we're looking in here, right? You don't have to, once again, be buying the zone exactly. You can wait for some strength, right? Like let me circle this, we're gonna zoom into it, right? Because this is a 15 minute, let's go into 1 minute. So let's just say, as I mentioned, we were buying in here, remember the strength off that zone, and we sold it in here, right? We got our 20, 30% money, and then we have this, we don't know what we're looking at, we break. Reject off this, that's our swing highs, and we come back here. We know that we have that support zone in here, right? From the previous all the way to the left, right there, these zones right here. We know we have support at that $9 to $10 million range. We don't want to gamble and buy instantly right here because it can melt right lower. So we're waiting is for some strength. And we have these strength, and we get above these highs right here, highs, right? And these highs, and you could start loading in because it hit your zone, it hit another support level, and now once again, we have these two resistance levels right here, and we're waiting to get above them. We get above them, we get in, you could get in here, you can kind of get in on these candles right here off the strength of the low. It's all up to you, right? You can get in off the bounce off the lows here and here once we show strength off the zone, or you can completely wait. If you're even more bullish on the coin, wait till we break this resistance up here. Sorry, it's a really ugly circle right here. And wait for it to get back above and then hit below the middle and then start buying there right here, right? Get above, into it, into the zone, boom. I personally like this more because it's less risky because it can very much just go like this, go here, and then go back down. It's all circumstantial. And I personally like getting in when it shows a willingness to bounce out of the zone immediately because people are buying this. So I'd be getting in here. And then once again, can you target a crazy number? Yes. But say we're getting in, let's say at 11 million, easy number, 11 million, right? What's 30%? 30% is 14 million. Okay, right here. That's perfectly with our resistance level right here. That's resistance. Okay. Or you can be like, okay, our 40% is right at this resistance level. We already hit it twice. So if we get there, we probably have a little bit more juice left in the squeeze. Let's see. We get above it, we hold the support, right? We're turning into support and we go higher and you're like, okay, now what? Well, let me think. Okay, well, I can do the vice versa, right? 3 drives pattern to the upside. 1, 2, 3, okay? You even get a 4th, right? People are bullish. That's another way you can look at taking profits is looking at 3 drives patterns to the upside. Because just like it bottoms here, 1, 2, 3, you also have tops, 1, 2, 3, see? So you have 3 drives. So you can also be looking for high time frame 3 drives when you're holding profits. I personally don't like doing that just because it complicates stuff too much. All right? Because with take profits, the only way we take profits is at resistance levels, and that's about it. Because guess what? When a coin makes a new all-time high, you have no idea where it's gonna go, right? Like here, we made the all-time high here. What did we do? We actually got above it, came back down, held support, turned resistance into support, and we went up. But you don't know that. So it could easily hit here and go straight back down. So that's why I don't like holding these coins till Valhalla, as you can say, and just trying to get a perfect trade in. I'd rather just get my 30-40% return and get out and just keep compounding that. Because as we saw, we're able to get multiple trades in. Okay, we're able to get multiple trades in. And it's not about making the most money. What we're trying to do is expose ourselves to the least amount of risk. Expose ourselves to the least amount of risk. We don't want risk. And that's all that matters. Okay, we do not want risk. So if we buy here and we're out here, that's good. Right there. We don't need a crazy return because we're trying to get the least risk for the most money, most bang for our buck. And so that's how I'm going to be trading in 2026 with regards to meme coins. This video was long in terms of trying to show you what I mean and actually use a live example on how this works. And you could also be like, oh, Chris, but what if it goes higher? Okay, well, let's see. Are you still bullish on it? What do you think? Well, okay. As coins get more exponential in terms of market cap increases, you're not going to get the same 60 to 70% dump, okay? But you can look for then about a 30 to 50% dump, depending on how bullish the coin is, into a zone. So this was our previous all-time high here. So we know there's support in this zone right here. There's support in here, especially with this in here. And what happens? We don't touch it, okay? We don't touch it. And that's okay. Not every time it's gonna be picture perfect, all right? Like, yes, it taps one of these levels perfectly. Like, if you wanna be really precise about it, like, yes, it taps this, which theoretically is a support turned, I apologize, resistance turned support. But that's getting too picky for me because this is the overall area I'm kind of looking for in here, right? Like, yes, it attaches this. This is technically a part of this, the wick. I prefer bodies as opposed to wick. It's just more clean. It's more precise. And especially with meme coins in 2026, or at least personally, I would rather be safe than sorry. Yes, can you actually mark out this as right here as a support level? You can, right? Because we have this pump, as we mentioned, right? We have this pump, and then we consolidate, and then we get above it. That turns right here into a support level right here, right? This gets turned into a support. But it's good, but it's not perfect. But it can work, as referenced here. It literally taps the very bottom of it and goes. And so what I wanted to just kind of discuss in this video is meme coin trading in 2026 does not have to be hard. It can actually be very easy if you develop a system. And what's that system I'm telling you to develop or use? Don't even develop it, use it. Go to Dex Screener, filter, all you need is just all the protocols selected and metrics 1 million, minimum market cap. Can you use lower, say 250, 500, 1,000, right? Sure, but it's not worth it to me. I'd rather just do this, okay? And you just look through all these coins. Let's look at this, right? This is new. Okay, does it follow the 3 criteria? 60 to 70% dip. Does it follow the 3 drives pattern into the zone? And does it offer a high time frame order block or previous resistance, aka a swing high turned into support? And as we mentioned in the example, we're looking at this zone, we do all the markups and we just wait. Patience. We just keep waiting, patience, patience, patience. It gets in, we get in, we take our 30, 40% return and we're out. And that's it. And you're gonna be mad, like, Chris, what the F? I did all that work for one trade. I only made a couple $100s or whatever. Yeah, but what was the risk on it? Nothing, right? For you to make 400 bucks, let's say 400 bucks, you were risking 200 bucks or whatever. And it's stress-free because you know we're in a good zone, we're in good hands. And if it breaks through, you know your risk is tiny. It's like 15, 20%, okay? And then you just keep going through Dex Screener. Okay, what's this war token? All right, it's a month old. I'm not really, I'm not really too about it. Let's stick to the ones that are newer. Okay, what do we have here? This one's a day old. Okay, what do we have here? All right, let's see. All right, 15 minute. Okay, I immediately am looking at this level just off the top of my head instantly. My eyes instantly go straight to here. My eyes straight go into here. Why is that? Chris, why is your head going to there? Well, as I mentioned, don't do the wicks. Once again, look, see how perfectly we rejected this? See how we hit here but rejected here? And look, couldn't get above, rejected right here. So that's how you know, hey, once this happens, you know we're going lower. And once again, look at this. This is the support. This is the exact same support we had on the punch coin. And we break through. Why? We're not buying it. We're looking for the dump. Where's your 60%? 5.9 million. Where's your 70%? 4.3 million, right? So we're looking to buy in this zone right here. Well, what's in this zone? This is what I marked right here. That's that. See how it's overlapping? So you know this area right here, the lower rectangle is better because you want the overlapping rectangle. So 60 to 70% gives us this rectangle and then this rectangle overlaps. So this is the area we're looking to be buying right in here. So we're looking for this area. And why is this area good once again? Well, okay, we have the high time frame kind of swing high, broken, turn into support. Then you have that once again, but this one's not in our zone. So this one's better right here. Likewise, why is this good? Right in here, right? Because I also spoke about the psychology of numbers in trading, especially meme coins. 1, 5, 10. So 1 million is right here, right? Too far away. Let me draw it, right? So 1 million somewhere over here. 5 million is right here. 10 million right here. So see how on this first run up, we consolidated at 10 million because people were taking profit. They were like, oh my gosh, 10 million, let me take profit. We blast through. Then people take profits. Guess where it starts consolidating? On 10 million. And it goes once again above. It struggles to break that closed candle, as I mentioned, and it goes back below. Where was the first area it's going to instantly go to? 10 million. And as you can see, people get scared. They're like, oh, it's not as strong. They start blasting it right through that 10 million right here. And then what happens? We get above. Can't get above 10 million with strength, it goes back down. People, once again, try and buy it, not enough strength to 10 million, and we have a nice candle down. Why is this? It's because it's not a big enough dip. This is not a big enough dip to be buying. Look at this. This is only 45%. It's not big enough. You need high 50s if you really want to be lenient, but mainly 60. You want 60. So where's 60? 5.8 million, right? And 70 is about 4.2. So you're looking at that 6 to 4 million, 4 to 6 million market cap. And then what I'm looking for right now, 3 drives. Well, what do we have right now? We have kind of one. We're going to have like another one somewhere in here, probably bounce here, or maybe do another bounce like this, and then another one like this. And then you might have an even another one here. And then we're going to get something like this, right? And where are you going to be buying? Right in here, okay? if we get something like this. I don't know exactly, because I can't predict the future, right? I mean, for all you know, Donald Trump could tweet this and it goes here. Obviously it won't, but in terms of Donald Trump tweeting, but whatever. You're identifying the zone. You can even use criteria such as psychological zones. As I mentioned, the 3 criteria, you can even add psychological zones as criteria 4. That's getting super specific, super nuanced, and you're not going to get many trades if you even add that, if you're looking for all 4. But you can have that as the 4th criteria, and you say, oh, I only want 3 criteria out of the 4, right? But what I would say, the must-to have to be the 60 to 70% dip, and high time frame zone. Those are the 2 non-negotiables. You need both of those. And then if you want to speculate with the 3 drives, you don't want it, okay, don't do it. Or you want to do psychological zone number 5 million or 10 million as opposed to 3 drives, you can do that, whatever. This is all you're choosing. But this is exactly what you need to be doing in 2026 for meme coins. Hey everyone, before we get into the video further, I'm just updating this in real time. As you can see, Lobstar actually did end up going to almost 1.5 million. This is an AI token. The AI that was controlling the Twitter ended up sending about $350,000 of the token to a random person who was begging in the Twitter replies. So once again, I just wanted to say that, as I mentioned, right, we identify our zone, which was about 4 to 6 million on this coin, right? But what did I say? You want to wait for the bounce and then some strength being shown. You don't want to just buy in the zone because, oh, Chris said that's the zone, right? Because what did I say earlier? This can continue going lower, right? And as we saw here, the bot ended up giving it to the random person some money, and he ended up selling it, and this is what caused it from 6 million to almost 3 million and downwards, right? So if you were looking at my prediction and what I was thinking, right, 4 to 6 million, that's our zone, and you just decide to, okay, let me just put my limit buy here, well, you'd be underwater instantly, right? I'm not telling you to do limit buys in these zones or just instantly blindly buy. What I'm saying is that's a zone where I believe it'll show support on a normal coin. Of course, if it rugs or whatever, I mean, you can't control that. But on a normal coin, that is where it's going to bottom. But you don't blindly buy that just because Chris said it's going to most likely bottom there. You have to wait for strength being shown, right? So if you were patient and you're waiting for strength being shown, you'd see this. Okay, no strength being shown. Okay, no strength being shown, no strength being shown. And then obviously here, you wouldn't really be buying based on this strategy. All right, based on this strategy, you wouldn't be buying this over here because that's not what the strategy entails. Of course, this is a previous strategy I did used to use many, many months and years ago, is when coins just dump a lot, I would instantly buy it once it starts consolidating down and sell for a quick profit. But that's not what this strategy is. This strategy is 60 to 70% dip from the highs, 3 drives pattern into a high time frame zone or order block, right? Support, resistance, etc. That's what we're doing. So you would not be in this trade according to this current strategy. And that's what I want. I don't want you blindly buying, because then you might lose, and you probably will lose sometimes when you blindly buy. Sure, if you blindly buy the zone, sometimes you're going to make good money. You're going to get the very bottom of the token and they'll go crazy higher. But then sometimes you'll have a situation like this where, say, you buy here and it just candles, and then you see here, you're like, all right, let me get out. And then, you know, it goes like this, which obviously this is irrespective of our strategy. We're not even discussing this to the right what happened. I'm just talking about this area right here where we spoke about this 6 million to this like roughly 4 million being a good area to buy, right? You still wait for strength. I just want to preface this. I'm recording this after the fact that I recorded this video. I just wanted to update you with the little prediction I did in the video. Anyways, let's continue further in the video with another example. And yes, it is going to be very boring. I don't care. Do you want to make money or do you want to have fun and, you know, do crazy things? If you want to have fun, go to the casino, go blow all your money, lose all your money, get drunk, do drugs, whatever you're into. I don't do neither. But if you're into that, go do that. And go blow your money. Go to the club. Do whatever you want if that's what you want to do. But if you're trying to make money, keep it simple, stupid. Okay? The stupider, aka simpler, you treat yourself and have a simple strategy and criteria you follow, the more money you'll make. Treat yourself like the stupidest person you know. Because what you want is to be able to explain to a 10-year-old you meet in an elevator what your strategy is in 30 seconds. Hey, Chris. What do you do for work? Oh, I do trading. Oh, How do you make money? I wait for things such as stocks, whatever, etc., coins, crypto, whatever, that a lot of people like. I wait for it to cool off and to go into a 60 to 70% retrace. And I wait for it to bounce off a previous all-time high or swing high and show support. And then I wait for volume and buyers to come in, and then I buy. And then I take a 30 to 40% return and I'm out. Simple. It's really that fast. And that's how easy it can be. So don't make it more complicated than this. This is all you need to do. Deck screener, filter, all these selected metrics, 1 million market cap, scroll through all these 24 hour, 6 hour, 1 hour, 5 minute, go through all the coins, every single coin, right? Look at this. All right, this one went crazy, right? And what do we have here? Let's see. Let's just back test a little bit. I know this is a long video, so I'm gonna end it right after this, but let's see. 55%, okay, it's not perfect. It didn't hit perfectly 60%, okay? Maybe this one did more. All right, it hit 59.99%, whatever, right? It's basically 60%. Once again, look, bounced off this zone right here, if you can see it, right there. If you perfectly see it, look, I'll do the magnet so it perfectly selects it, so I'm not BSing you guys, look at that. Hits it, bounces, you get roughly a 70% return or whatever this is, 60, 50, whatever, and that's it. So this works. I just picked a random coin. I didn't even show this coin on example, and it works, okay? Or what's this? Last example, real quick, zoom out. Obviously, you're not trading this garbage, okay? You're not trading this garbage. But what you're doing is once you see high volume, right, where are you buying, right? You saw this happen, right? Let's just say you saw this happen. This is the coin right now. It's up here. Chris, where do I buy? Well, let's see. Right here, no, I can instantly tell you because it's too close. It's not a far enough dump. Okay, well, the coin's been existing for a while. Let's look to the left. Okay, what do we got here? All right, this is our first initial high. It coincidentally hit almost a million, psychological number. So what are we gonna do? We're gonna put it right here, right? This is kind of our zone we're looking at, right there. Now let's do. Oh, what happened? What happened? I wonder what happened here. Okay, that's our zone. On the pump here, as you can see, we came into this resistance zone to the left, got below it and above it, turning this into another high time frame support. So you have that. You can even count this one more because they're overlapping, so they're two in time with each other. Beautiful. So that's our zone we're looking for. All right, let's look at the dump. All right, 74%. A little outside our coloring range. That's okay, because once again, we're trying to be precise, but you have this zone right here, right, as we mentioned. It's a little too much, I apologize, right there. We have this zone right here, which coincides with 72%. I was just trying to tell you to use this zone because it's even more specific, because this zone's in this zone, so we know this zone's even more important, right? So I was just trying to be more specific. But as you can see, we're waiting for the zone to get hit. 60 to 70% is usually the number where the zone is located and where it hits. As you can see, sometimes it colors outside the line, right? The previous example, Penguin, was like 59.99%. This one's 72 to 74%. That's okay, right? Because you're not instantly buying, as I mentioned. Remember, we're waiting for strength. We're waiting for it to stop. So what happens? Comes in here, stops, bounces. Can you buy this? Yes, you can. You can buy this at $1 million. You get 1.5. You made 50% right here. Okay? But if you zoom out a little bit, it comes back in. This is kind of our $1 million psychological zone. And you wait for strength, and you're buying in here, right? Or in here, above these swing highs, especially above here. Once it gets above this area, and this especially, once it gets above this and this, it's kind of off to the races right here, right? And then gets above, and then boom, starts pumping. What does it do? Rejects right here once again. Where does it go? As I told you, it's not going to give you that perfect dip. That's I think 50% roughly, probably 40%, because it's already given you that 60 to 70% dip off this zone, right? So for it to do it again, it's weak. If you see this again and it goes here again, that's weak. You don't want that. You want a smaller dip on this part. You want really, really bullish coins will be 30%. Normal coins, 50% roughly, right? And what do you get here? 40, 47, which is in between 30, 50. And then you have this kind of support off here. This previous right here, right? These swing highs, all this stuff. And look at that, touches it right there. So keep it simple, stupid. Don't overcomplicate it. Get in, get out. I would rather you do this, what I'm showing you, and trade 5 times a week and say make $500 a trade and make $2,500 a week, then trade 1,000 coins on Pulse here, buy 1,000 of them and do all this BS, and you make 2,000 bucks because you're draining your mental capital. Even if you make $3,000 doing what I show you a week, and you do $3,000 showing you this, and you make money, you're gonna get exhausted and burnt out. And there's too much time you gotta spend here. As opposed to here, you're just relaxing, you're looking at coins, okay, what's going on, blah, 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 blah. Okay, so I know this video is long. I hope you took something away from it. In the future videos, I'm going to speak more about 3 drives pattern, support and resistance, 60 to 70% dips, and all these things that I've spoken previously about. I'm gonna redo videos of them, more updates, etc. Once again, I hope you enjoyed. I appreciate you listening to me and hanging out, and mainly listening to me yap and rant, and hopefully you took away even a grain of salt of info here that can help you make some money in the meme coin trenches of 2026. I love you all. If you do need a meme coin trading platform, sign up using the link in the bio. It gives you 20% off trading fees on Axiom, which is already the cheapest and the fastest meme coin trading platform used by everyone. So I hope you all enjoyed. Till we talk next time, bye-bye.